Welcome to this brand bite size. Today we're going to talk primarily about the differences in the taxation of offshore and onshore investment bonds, while noting some similarities. One of the main attractions of offshore bonds is gross roll-up. Unlike an onshore bond, the underlying funds of an offshore bond will not be subject to UK corporation tax, and they are usually established in countries with a favourable tax regime, where the investments can roll up virtually tax-free. However, there may be a withholding tax in some situations which may or may not be recoverable. Time apportionment relief, which is also available on onshore bonds, will reduce the amount of tax payable where the investor was not a UK resident for any of the time the policy was held. The 5-step top slicing calculation is identical, except that at the very end we only deduct the top slicing relief from the liability rather than the top slicing relief and the basic rate tax credit. This is because there is no tax credit with an offshore bond. If an offshore life office with UK resident policyholders owning funds in excess of £1 million does not appoint a UK tax representative, HMRC will appoint one for them unless they agree to issue any chargeable event certificates themselves and provide HMRC with required information. When comparing onshore and offshore bonds, it should be remembered that any non-reclaimable withholding tax will reduce the effect of gross roll-up, that no credit would be given for this tax in calculating the chargeable gain, and that there is no internal tax that expenses can be deducted from, which will again reduce the effect of gross roll-up. With onshore bonds, a further 20 or 25% income tax is due for higher rate and additional rate taxpayers respectively on the net return of the fund, i.e. the return after corporation tax on income, and gains equivalent to the basic rate of 20% is deemed to have been paid. This compares to a 20, 40 or 45% on the gross return of an offshore bond. This can lead to higher net gains for onshore bonds. Thanks very much for watching. We'll see you next time.